Thank God it's Monday. It's time to do business, and this is a special week. We're beginning that celebration of Nigeria at 64 years of independence, and we'll start from right here. That's why here in Business Incorporated, we have that as part of the stories that we'll be viewing today. That's right, Nigeria at 64. We'll look at some important economic indices as the country celebrates that. And then we go over to Egypt, where Suez Canal's revenue reduces by 60%. And not good in South Africa. 7,000 jobs have been cut in the mining sector. Good afternoon and welcome to Business Incorporated. I'm Amy John Mekwa, and yes, it's pre-Independence Day. So we're starting from the global space as usual. Oil prices slumped and reversing some of those gains. It went steady, also on track to fall for the third month in a row as strong supply outlook and questions around demand outweighed fears that Israeli strikes in Lebanon and Yemen could escalate conflict in the Middle East. We look at the numbers right there. The more active December contract. Now we've gone from November contract to December. We see an increase right there, 0.71%. That's about 6 cents for Brent, $72.49 a barrel. 10 cents is what was added on WTI. That's 0.68% to $68.10 a barrel. And then we see for weekly performance, this is the close of week last week. So we saw Brent lost 3% right there. This is for the close of last week. And then WTI lost 5%. So on Monday, prices were being supported by the possibility that Iran, which is a key producer member of the Organization of Petroleum Exporting Countries, may be directly drawn into that Middle East conflict, which of course is not good for everyone. And the United States has said we have to fight a full-blown war at all costs. We have to ensure that it doesn't get to a full-blown war. Still in the global space, we're talking metals now. We see gold prices eased on Monday and dropped 0.2% to 2,600. That new high are still sustaining that in spite of the drop, $2,653.38, while U.S. gold futures was on the flip side, 0.3% up, still around 2,600 there, 2,674.80 as at this morning. A stronger dollar makes gold less attractive for those with other currencies, and bullion has risen slightly about 14% so far this quarter. We know the quarter ends today. Tomorrow we enter into the last quarter of the year, the fourth quarter beginning from tomorrow. So looking at the quarter there, we see it's been slightly risen about 14% so far. On a month-on-month basis, gold has added 6% in September after hitting that new record high of 2,685. So let's look at other metals now. Spot silver went down 0.4%, $31.49 per ounce after following a 12-year peak that is reached on Thursday. Platinum also went down 0.1%, $999.35. Palladium was on the flip side, 1.10% up, $1,012.50 is what it at this time. Now let's come to Nigeria and see what's going on. The World Bank has approved 3 new loan requests of about $1.57 billion for Nigeria. In a statement released, the International Financial Institution explained that these new finances include $500 million for addressing governance issues, $570 million for the primary health care provision strengthening program, and $500 million for sustainable power and irrigation for Nigeria project. Well, the World Bank states that approval of the loans is to support the federal government in strengthening human capital through better health for women, children, and adolescents. It adds that the approved projects would also help build resilience to the effects of climate change, such as floods, droughts, and through improving dam safety and irrigation. Still in Nigeria now, credit to government climbed by more than 11 trillion naira in the last month. This is according to latest money and credit stats data from the Central Bank of Nigeria. This comes as the private sector experienced a slight decline in credit as debt repayment intensified, buttressing the impact of rising interest rates, which have made borrowing more expensive for businesses while driving greater interest in government securities. The CBN data indicates that while the government is increasingly tapping into credit markets as it continues to rely more on local borrowing to fund its expenditures, the private sector seems to be retreating. The data further shows that credit to the government accounts for 29.4% of 105.88 trillion naira net domestic credit in August. Let's do a bit of corporate now. Some interesting numbers coming from the half-year results of United Bank for Africa PLC. So we see that they have announced a 2 naira interim dividend for half-year ended June 20. The other part of the report shows that the pre-tax profit was at 401.5 billion naira. And that's compared to 403.6 billion naira reported a year earlier. And then the bank's profit position was underpinned by a robust 614.4 billion in net interest income after impairments. This represents 395% increase compared to 124.1 billion reported in the same period of 2023, suggesting that the quality of its half year's profit was driven by core business fundamentals and not forex. There's been another change to the customs duty. The exchange for customs duty collection currently is at 1,637 for a dollar. That's is the exchange rate for now. Meanwhile, last week it was at 1,666 for a dollar. So that shows a decline for what we have this week. And according to Customs Exchange Rate Portal, the FX rate for duties collection has been rising steadily from 1,564 for a dollar since the beginning of September. The rise in the customs duty collection comes amidst a lot of intervention by the CBN and renewed depreciation of the Naira in the month of September, which ends today. I'm talking about the Naira as the third quarter of this year winds down. So far, the Naira has lost more than 2% going by Friday's close at the official foreign exchange market. According to Mr. Mukhtar Mohammed, the Chief Executive Officer of Finance with Mukhtar, the Naira losing value is a major challenge, raising prices of essential commodities like PMS and among others. He made this comment earlier on Business Morning.
I think for me, the greatest mistake they made was moving the Naira to convert at 960 and then move it to 1,400. And after that, the Naira has not recovered. You know, every time it got to 1,900. Now, all that is basically trying to make the Naira, make the market more interesting to attract foreign portfolio investors. And really, they have not really come in like that because nobody wants to come in an unstable currency market, volatility here and there. I think the CBN is doing everything possible to see how they can track FX. And I think for the first time, or maybe for the second time, the CBN is beginning to look, the challenge with the Naira, the challenge with inflation is not just that mopping up liquidity, hiking the rates. You could do all that, but if you don't bring that stability in the exchange rate, you'll just be playing around the corner. 40% of the demand for FX is driven largely with the importation of refined petroleum products into this country. So you know what it means when demand 40% drops. Definitely, we should see those huge drop in terms of the exchange rate. 40% pressure off the Naira.
So that's it. The Naira is one of our focus as we celebrate 64 years of independence. I mean, imagine there was a time when the Naira was equal to £1. How much is it today? Well, let's discuss this and other issues with Mr. Oju Demezwe. He's joining us from Kigali, where he is at the moment as a managing consultant and chief executive officer of Flame Academy and Consulting Limited. Mr. Demezwe, good afternoon. Welcome to the program.
Good afternoon, Ini. And would I say happy independence in advance?
Yeah,
I hope Nigerians are truly happy. And I hope we are truly happy in this independence celebration.
yeah, I
I'm
don't.
sending you warm greetings from the city on the top of this.
Yeah, I wonder if we can actually say we're happy when we look at the Naira and remember that after our independence and then, we were able to halve the Naira, which was afterwards, after 1960, that the Naira was equal to £1. And then when we see the value today, well, I don't know if we will say happy independence. And then we see now that the Naira for, I think this month has lost more than 2%. And this is in spite of the many interventions by the Central Bank of Nigeria and also the use of the Dutch auction system. So I wonder what else we have to do to have, a proud Naira, if I could say.
Naira is on a long journey to recovery. And until we get our hands to work and start looking for quick fixes and get into beyond the temporary measures, hiking of rates, trying hard to bring in portfolio investors and so on, and yet the environment in the country is very uncertain. Both portfolio investors and direct investors are going away from the country, insecurity and all of those. And we are still heavily importing almost everything we use in this country. And we are, more than 40% of our dollar usage is still being used to import petroleum products. Despite being a crude oil manufacturing company and having more than 4 refineries before the Dangote refinery, coming up. I don't know if you can hear me. It looks like a network.
I can hear you, Mr. Demese. Please go ahead.
Okay, so I'm just saying that in every index, all indices, Nigeria has progressively got worse in the past 64 years. And that's the sad truth. I like to say it the way it is. Nigeria is not doing any better in any parameter that you want to use to look at a progressing society, a developing society, a society that's getting better or evolving into something better, a society that gives hope to its citizens. In no way at all you can, say that Nigeria is getting better. Whether you're looking at the face of Naira, Naira is just one dimension of our failures. There are several other dimensions. I don't know how much time we have to look at that, right from political economy, our politics, our security, internal democracy getting stronger, unemployment, GDP growth being fragile, poverty, human development index, misery indices, performance of the currency, debt accumulation and all of that. From all ramifications, Nigeria is not doing well at all. And that's quite sad for me.
Where would you say we missed it? Because, it does look that we had all the opportunities. We still have all the opportunities. We're still talking about potential 64 years after. We look at agriculture and we say, oh, we used to do better then. We had the cones of cocoa and palm and all of that. Where did we miss it exactly from your point of view?
Ini, if I want to give you a summary of why we are not doing well, I will say Nigeria has a very rich, huge, it's actually a paradox, really, for me. Nigeria has a very huge, rich human capital. Nigerians are doing very well all over the world, in Americas, in Asia, in Europe, anywhere you find a Nigerian, whether in the university, in the academia, or in the business world, or in the military, aviation, every sector, Nigerians are doing so great. But once you cross the boundaries and enter Nigeria, it looks like we all become, very redundant, inefficient, corrupt, unable to work effectively. So something is wrong with the structure we have in Nigeria in terms of harnessing of human capital. Beginning from our politics, Nigeria is a place where we have professors supporting touts to take over government and to bring about, bad leadership from year to year. So even the academia, those who are meant to be our best quality people, have joined them because they say, if you can't win them, you join them. Our professors run our electoral processes, and we have seen the most corrupt electoral process in the past, 1.5 decades or so in this country. And that's very sad for me. Those who are meant to be championing ethical, transformational and exemplary leadership are the ones now who are, because of poverty, because of poor remuneration and so on, we are now beginning to sing the song of never do wells in our political space. And mind you, no matter how you look at a nation, politics is the producer of poverty, bad economics, injuries to everyone, because the political class are the ones who employ the technocrats, if they have that intention, to be able to fix the economy. So anytime you have a bad politics, selfish people and so on, you can never have prosperity for everyone. No inclusive prosperity, no development, because, in economic theory today, we have separated economic growth from economic development. And the fundamental truth is that you cannot have economic development without having, people transforming growth into development. So, if without systems working, politics being, in proper order, and human beings deciding to transform growth for national development, not growth for personal, aggrandizement, until we have our political system changed, our democracy grown and very well established, whereby decent people can be thrown up through party internal politics and then through proper elections of leaders in our states, in our, in the country and local government. Until we get that right, Nigeria will continue to drift into anarchy, into disaster, continuous borrowing.
So where do we, Mr. Demise,
bad running of our government,
Mr.
Demise, everywhere.
Mr. Demise, so where do we start from? How do we start this need? We know what we need, we know what we should be doing or where we should be. How do we start? There's politics, and of course, as you said, it rubs off on every other thing.
Okay, if you want me to tell you the truth of how we must start to get things right, we must step back and look at our politics. We must have a single leader. We must be able to decide what kind of people we want. When Nigeria has a single stroke of good leadership, somebody who can come in and say, you know what, forget about my personal gain, forget about my family, forget about my party and so on. How do we reconstruct Nigeria's constitution to be minded towards development than just going to Abuja to go and share money and so on? How do we forget personal aggrandizement and so on and throw out the best people in our politics? So we have to go back to the drawing board, and it will take a single leader. I don't know if we have that leader today who will decide to perish his personal interest and decide to inculcate, proper democracy in our parties. First of all, whittle down the number of parties, get down to about 2 or 3 or 4 parties, and ensure that the parties are able to run their affairs properly and throw up decent people in their own party structure, and ensure that there's no interference with the National Electoral Commission, allowing them to do their job and getting, in nowhere interfering. Look at the election a few days ago, and the other things, and people are, jubilating that our party have done it. We have rigged them out, and they can't do anything about it. If anything happens, we run to Abuja and we get the powers that be to confirm whatever was announced. And if you go to the courts, by the way, and that's where, the future is so bleak, because we don't have a confident judiciary. Well, with all due respect to our learned, our judges in all the courts, state courts, state high courts and federal high courts, and the appeal and the Supreme Court. In my own personal judgment, I don't believe the judges, when they say things anymore in the courts. And that's the most injurious thing that can happen to a nation. When a judgment is given and a simple member of society, feels that judgment was not rendered. So judgment is, not only supposed to be given, but manifestly seems to be given. Today, that's not the case. With all due respect to the lawyers and the benchers, I feel that our courts have been taken over by money politics, by greed and corruption. There are still a few judges, by the way, who may be upright, but the whole system is, in my own view and assessment, very corrupt. And until we fix that place, through a revolutionary process, we can't get things right, because they will rig you out, in the streets, and they come to the court and also rig you out. So the solution is very tough for me, but I think we still need to step back and ask ourselves, who can be that leader who can be so selfless as to allow the systems work, the police, the army, the court systems, the tiers of government and so on, to work without any personal interference. Because today, the winner takes it all in this country. And that can never be a recipe for progress and development in this country.
All right, Mr. Ademiso, just before we let you go, I don't know if you've seen this trend on X recently about how if you were to save or earn a Naira every day, at the end of the year, you still would not be able to make or earn up to $1. You know, I mean, that's another heartbreaking reality that comes to the fore as Nigeria celebrates independence, 64 for that matter.
You know, while our Naira has become just plain paper of no value, you also have to think about those who work and receive 70,000 in a month, while a bag of rice alone is about 96,000 today in the market. What is the fate of those families? Let's say a nuclear family of one man, a wife, and even 3 children. But we know that people also have more than that in their houses. How do they feed? Do they even go to school? How do they consume electricity and water? So Nigeria is becoming a very horrible place to live. And to worsen that, people are not safe in their houses. Not in the southeast, not in the northeast, not in the northwest, not anywhere, not even in the southwest. People are not safe. The basic requirement of every government is to secure its citizens. That's not done. Today, Nigeria is still grappling with 4,000 megawatts of electricity. For how many years? Where are we headed to? You can't provide power to drive the economy. You can't refine your own petroleum product, and create jobs locally here. You can't even harness your agricultural produce and be able to, provide food for your own people, domestic consumption. Not to talk about post-harvest technology of trying to harvest those things, harness those produce. We have a lot of them, whether it's tomatoes, whether it's plantain, whether it's cassava, yam, vegetables, the groundnuts, the pyramids in the north and so on. Why have we abandoned all of those? All at the altar of crude oil discovery that has ramped up corruption in this country, and we're fighting over it. Look at where we've left ourselves. With the crude oil and all of that, our Naira is worth nothing now against the dollar. It's quite a shame. For me, we need to sit back, east, west, north, and south, and ask ourselves, must we continue in this way, if we want to be alive in this country? How do we step back and ask ourselves, we need to bring up the greatest leader in this country, whether it's Yoruba or Hausa or Igbo or Efik or Ibibi or whoever. Because the politics we are playing in this country is tribalistic, religious, and so on, and it's not taking us anywhere. When we begin to look at the people in our country, we tell the color of politics, the color of tribe, the color of language, and the color of culture and all of that, and bring our best. And we have them everywhere in this world.
All right, Mr. Ademiso, some sad realities there, which we're facing even as we celebrate 64 years of independence in the country. But thank you so much for your time and your views. Managing Consultant, Chief Executive Officer of Flame Academy and Consulting Limited, Mr. Oji Udemezue.
Thank you. God bless you.
So, of course, this is the season of looking inwards as we celebrate independence. How well or not have we managed our affairs as a country for 64 years? This is a continuous conversation. But now let's take a break on Business Incorporated. When we come back, we'll head to the markets. Just stay with us. Welcome back to watching Business Incorporated on Channels Television. We head to the markets now with Anita Edet. Anita, it's the last trading day in the third quarter. I'm sure you do have some backlog or review of data for us.
Yes, Ini, I started last week with a review of the fixed income markets, and of course, every quarter is worth you taking note of, because it shows you where you started from within a 3-month period, and then across all markets, everyone is taking stock. How the performance was for the outgoing quarter. So, and of course, this time I'm focusing my attention on the equities market, which will be getting more details even for the intraday market analysis before the final close of the day. Now, take a look at the screen there, 98,685.00. This was the last track that we had for today for the intraday numbers for Nigeria stock market, 0.23%. And this number, mind you, it started the the third quarter at about 120.83 thousand, 100,020.83 points, but the index has lowered to about 98,685.00, and that's about roughly about 1.3% drop. And at the same time, the market has started by about 56 trillion naira, so still within that range. And so far, if you want to compare within the quarter between July and to the last trading day of September, which is currently now, the market has lost just about some 2 billion naira. And of course, it has been quite an interesting month, an interesting quarter, particularly for the month of September, where we saw some activities from flour mills down to Oando, also to Seplat, and so many others, which have helped to shape the month-to-date performance to plus 1.9%, almost 2%. And then year-to-date, still in the positive territory, 31.7% for Nigeria's stock market so far for it. And for the Johannesburg Stock Exchange, 0.63%. Let's take a look at, for this Johannesburg Stock Exchange, the mining sector has actually revved up the performance for Q3, despite this intraday down that you see. But so far, the market has come all the way from 80,000 to about 87,000. And then, of course, this number had climbed a little bit higher, but just a slight pullback in which you see some bargain hunting and some profit-taking activities taking its toll on the market. Now, let's move over to the other side of the market for the African continent, where we see the EGX 30 as well as the Kenyan stock market making some mixed printing. But so far, NGX, Nigeria stock market, is the lone gainer there, while we see the EGX 30 just by a tad, 0.01% at the last track, 31,461.74 for that market number. And then for the Nairobi Stock Exchange All-Share Index, it closed for Friday at 0.05% in the green for that market at 107.16. That's for that market index. And now we're talking about Nigeria's the domestic equities market, where we see the quarterly performance as well as the sectoral performance. But to take a closer picture of that, we have analyst for today, Dr. Peter Abe, equity trader with Stanbic IBTC stockbrokers, to give us more details about that. Thank you for joining us, Peter. Hello, Peter, can you hear me?
Yes, I can hear you. Good afternoon.
Okay, yeah, good afternoon, Dr. Peter. Okay, so now the domestic equities market, let's start first with the quarter-to-date performance, 1.6% decline. Now, give us just a wrap-up of all the activities within the quarter-to-date from July to September.
Okay, so you rightly mentioned quarter-to-date, the market, all-share index has actually lost 1.6%. But when we look at the various sectors in the market, the oil and gas really gave us much of the gain we had in the market for the quarter. Oil and gas gained about 38% quarter on quarter. As well as banking sector also gained 12%. So when we look at it, you rightly mentioned some of the activities we saw in the oil and gas space, Oando, about the completion of the acquisition of any subsidiary Nigerian Najib, and also Seplat talking about extending their time frame to acquire the mobile producer in Nigeria. So these are the factors that drove, the positive sentiment in the oil and gas. And when you look at the banks, you also saw some of the public offers we saw during the quarter. Many of these banks, we saw them in the markets, from GT to Zenith, Access. So these are the names that we have seen, and a number of the half-year number also were released into markets, which were actually positive and drove activities in the banking names. However, we have a few other laggards in the market, from the industrial to consumer. We saw the industrial lost 18% quarter on quarter, and consumer lost 1%. So these are the just a brief summary of what happened in the market during the quarter.
Okay, so that's a quarterly review, but let's talk about the intraday market numbers. How are the sectors, all the sectoral, the 5 key sectors, how are they performing at intraday?
Okay, so at the moment, the banking index has gained 1.57%. We received the news of the UBA numbers into the market earlier today, which saw a positive rally in that name. That also had a positive effect on the underbanking names like Access, good run in Access, currently GTCO, and even Zenith. So, if you look at it, the banking names are having a good time this morning with the gain of 1.57, courtesy of the UBA numbers.
Impressive.
Each one of them.
Impressive. Okay, Peter, Dr. Peter, I think we'll leave it there and, of course, take our attention to other markets that we're currently tracking around the globe. So thank you so much for your view on our show.
Thank you for having me.
As Dr. Peter Abe, equity trader with Stanbic IBTC Stockbrokers for market numbers at intraday. And now let's fly over to the Middle East, where we see the market numbers are not doing pretty well at all, especially where we started from the United Arab Emirates. The Dubai index, 4,498.62, down by about 0.5% at intraday. This was the last track that we had a couple of minutes ago. And then the Abu Dhabi index, 0.47% down at intraday, 9,425.30 for that market index. And for the other sides, for the Saudi Arabia's Tadawul, 0.08% down at intraday, 12,261.92, and the Qatari Stock Exchange, 10,614.09. Well, that was the only gainer there at intraday, 0.27% in the green for that market. And from the Middle East, we go over to the United States, where we see stock futures little change, as the month of September gradually, just a couple of hours away, especially for the US, which the time it will be opening will be about, the opening bell will be about 2:30 Nigerian time, but that's of course the time difference there. But the Dow Jones Industrial Average, the stock futures there, 0.08% in the red, 42,621.00. And for the S&P 500, 0.08%, also 5,786.50. And the NASDAQ, 0.05%. So far, we know that the markets here, particularly for the month of September, it had a very rough start. Now, of course, but that jumbo rate cut from the U.S. Fed actually helped the market to some positive and significant gains within the month. And so far, looking ahead, the market is expecting that, of course, October is known to be a troubling month, for U.S. markets, because it's known as a time of extreme volatility, with more notable Wall Street drawdowns occurring during the month. But so far, we'll look out for how that market closes the end of Monday's trading session, which is actually the last trading day for September. Overnight, the U.S. markets, the Dow Jones Industrial Average, it had hit a new highs on Friday. This is because traders assess fresh data, which show that there's more progress in the U.S. Fed's efforts to rein in on inflation. So that's it for the U.S. stock markets. And finally, for Asia markets, we see the regional indexes, just a fairly mixed picture there. We see the impacts of some economic data from Japan as well as China having different shades of color for the market. Last time we saw the Nikkei, it was about 39,000 points. And so far, it has dropped by more than 4%, down by 4.80% at 37,919.55. And this is because at some point we saw losses in the real estate, the industrial production in the country dropped by 4.9% year on year in August, and that's more than the 0.4% fall in the month of July. For the Kospi, we see 2.11% drop there. The Hang Seng Index, well, on the other side, it was in the green, 2.43%. And for the Shanghai Index, we see the numbers being in a shade of the green there. Wow, that's a massive rally, 8.06% for the Shanghai Composite, and this is because the PMI, that's the official Purchasing Managers Index reading for September, came in at about 49.8, which is better than the 49.5, which was expected by a survey of economists. So that is actually rubbing on the Chinese market, which of course will be closed today for the Golden Week holiday, while the India's Nifty 50 is down 1.41% for the close of Monday's trading session, 25,810.85 for that market. So any September finally coming to an end, I don't know what you're expecting Nigeria's stock market, what direction it would end the last trading day.
I'll stay positive. That's why I have green on.
Oh, yeah. And of course, it's the color of Nigeria's stock market.
Exactly.
Well, of course, we'll be closed for a holiday.
Yeah, Anita, thank you so much.
Pleasure.
All right, now let's head to London, where Juliana is standing by to give us updates from the UK. And the thing is, the GDP of the UK, we see it dropped from the first quarter where it was 0.6% to 0.5%. I hear services sector contributed to this, but Juliana has the details. Hi, Juliana. Good afternoon.
I could hear you, Inni, but I can't hear you no longer. Hopefully you can hear me because we're using the power of technology. And just to repeat what I said at the top, we have had revised data from the Office for National Statistics looking at second quarter GDP figures for the UK economy, as well as year-on-year data. And it is shown that it was slower growth than initially anticipated or initially forecast. So what was registered in the second quarter was a 0.6% uptick. It's actually 0.5%. That may not seem a lot, but it is, because of course at the end of last year we just came out of a shallow economic recession. So I think what this data does paint is that the economic recovery is much slower than anticipated, and this is going to be lots of food for thought for the new Labour government. We've got the Conservative Party annual meeting carrying out at the moment, and Jeremy Hunt, the Labour, the Conservative shadow chancellor, is talking about the Labour Party and the hotly anticipated budget, the first budget by a female chancellor in history in the UK, and that's coming up in the next 4 weeks. And we know that Rachel Reeves has already spoken about, I think she's coined the term securonomics, talking about fiscal responsibility rather than handouts. But then, if we look back at the historic victory of Sir Keir Starmer, the leader of the Labour Party, it was all about the economy, right, and dragging people up. Doesn't seem that they're going to be able to do this, and it's not going to be as easy as anticipated, particularly because we've got that £22 billion black hole. There is shining lights, and I think you referred to the services sector, Inni, an all-important sector for the UK economy. It contributes about 80% overall to GDP, and that's been performing particularly well, especially in areas of hospitality. And of course, we had Taylor Swift in London, and so the Swifties did help boost the economy, but not so even in areas such as manufacturing and construction. We are still the fastest growing economy in the G7. We know that inflation is cooling, even though it is slightly above the central bank's benchmark. So it's not all doom and gloom, but unfortunately, this revision, as I said, is going to be food for thought ahead of an all-important budget.
Yeah, food for thought indeed. Let's look at the markets at this time. Wonder what the sentiment of investors are.
Sentiment's damp, and it's pretty damp here in the UK, actually. Very much autumnal. We're coming into autumn very soon. Lots of wet weather, and it's dampened the mood on the FTSE All-Share, which is down 0.47% at intraday. The FTSE 100, the blue chip, down 2 at 0.43%. FTSE 250, the domestic market, down at 0.77% at intraday. In the currencies market, the British pound is currently trading up against the US dollar by 0.04%, though down against the euro by 0.08%, and down 2 against the Japanese yen by 0.05%. In
Anna, thank you so much for that. Now let's go to Berlin now. It wasn't a very good weekend for some workers in Germany, where employees of one of the country's biggest industrial firms, they really got bad news. We hear that they're about major cuts in the auto industry. Well, let's get the details now with Lars. Lars Halter joins us from Berlin. Hi, Lars, what's this about?
Thanks for having me, Ini. Well, today we're talking about ThyssenKrupp. That is the country's biggest steel giant, actually one of the oldest steel mills in the world. And maybe more importantly, it's a German industry legend dating back to the 1870s, a backbone really of the industrialization here. But there's been problems developing for a while, and the conglomerate's steel business just got a new CEO. And it's a rough start for him right from the get-go now. He told employees this past weekend that major cuts will have to be made to improve the company's profitability. He says the current situation in steel markets has deteriorated more than even anticipated. And make no mistake, they did know, of course, that things weren't going great, but it just seems the situation is a lot worse than even recent numbers had shown. Now, the new CEO says that doesn't leave him much of a choice. He says he can't put a number on job cuts for now, but one thing he says is sure, in future, there'll be fewer people working at the company than today. That is, of course, not very detailed, but it definitely ruined many workers' weekend.
Yeah, unfortunate there for ThyssenKrupp employees. We hope it doesn't spread. But let's look at investors. How are they faring at this time?
Well, let's start with a look at Asia, where markets have been trading all day and mixed up in China after all that stimulus last week. So shares are continuing their rally, clearly indicating relief on investors' minds over the government finally stepping in and acknowledging that the Chinese economy is in duress and needed help. Then over in Japan, markets are down. Rumors there that the country's new Prime Minister, Shigeru Ishiba, wants the Bank of Japan to start normalizing interest rates. That, of course, after the country had extremely low rates for many years. Now, here in Germany, we'll be getting some fresh numbers on inflation. And later in the day, ECB President Christine Lagarde will have a speech. So some interesting economic points coming up.
All right, Lars, thank you so much.
Thank you, Ini.
All right, so let's come back to Africa. Now we're starting from Egypt, where the president there says that its revenues from the Suez Canal has dropped by 60% or more. That's about $6 billion in recent months as attacks by Yemen's Houthis disrupt Red Sea shipping. President Abdel Fattah el-Sisi spoke during a graduation ceremony at the police academy in Cairo. The canal is a major source of foreign currency for the country. Attacks by Iran-backed Houthis have led shipping firms to divert traffic around the Red Sea and, by extension, the Suez Canal, linking it to the Mediterranean. The Houthis say they are targeting ships linked to Israel and its backers as a gesture of support for the Hamas resistance in Gaza. The Egyptian president has warned that there would be serious consequences in the region and possibly around the world if the situation continues. We're still in Africa, but now in South Africa, the mining sector there not looking good. It shed 6,926,000 jobs in the second quarter of the year, bringing the total employment in the industry to 472,000 at the end of June. According to Statistics South Africa's latest quarterly employment statistics, the sharp drop in mining jobs in the past quarter more than doubled that of the first 3 months of the year, down 1.5% from the midpoint of last year, reflecting a wave of restructurings and retrenchments over the past year. This comes as falling prices of platinum group metals, rising input costs, and logistical challenges continue to weigh on mining companies. The outcome for mining employment in the second quarter contrasts with the rest of the economy, where 49,271 jobs were added in the second quarter of this year. Not good there for miners in South Africa. Well, let's head to crypto now. Not mining crypto, but crypto generally. Find out what's going on there. I wonder if the miners in South Africa are mining crypto.
Yeah, we know the crypto miners. I think they've been in profit for a while now with most of the coins that they've mined. But very soon we hear there might not be any more coins to mine. That's
no, but we hear there's still a whole lot left.
There's still a whole lot, but at some point it's going to happen.
Yeah.
Not now, but sometime in the future, It's just bounce.
Even if we switch to solar mining?
Well, even though you switch, once all of the Bitcoins are mined,
then
it's over. Then who knows what happens next?
Then Bitcoin will become gold.
Yeah, to become a very limited
no more supply.
asset. Yeah.
So hold on to your Bitcoin.
Hold on to whatever you have. Not financial advice, though. There you have it. Ethereum, $2,605, down 1.72%. So we're seeing a pullback in the market this afternoon. For the quarter, Bitcoin outperformed Ethereum. If you look at the quarterly performance, but not far off from the first day of July, Bitcoin was about $62,000. But let's start with Ethereum then. Ethereum, July, started $3,432. That was the trading for that day. Then fast forward to today, $2,513. So we see Ethereum down. That's for the quarter, the third quarter. Let's look at Bitcoin, though. Bitcoin, on the flip side, outperforming Ethereum for this quarter with a gain there, but not so much, just about $800 or so, $62,673 at $63,000 for September. But we still have more trading today. This might actually flip. So what we have here is quarter to date. Up to some stories now. We see OKX, Shiba Inu. They're going to be delisting the asset there, Shiba Inu, one of those top meme coins in the market. That announcement came as a surprise to some investors. That's the world's second largest cryptocurrency exchange. OKX is going to be delisting Shiba Inu. Then Taiwan has approved foreign crypto ETFs. We're expecting the Bitcoin ETF. That's happened. Ethereum ETF. So we're seeing other countries now follow suit with an ETF for most of these assets. Then we see FTT. That token has soared about nearly 60% when we see FTX Exchange announcing that they'll pay some investors about $16 billion. So we're seeing the token for the exchange there, the embattled exchange, rising. So greed, that's what the sentiment for the market is. Let's bring in Emmanuel Anyasi now to bring us up to speed. Hello, Emmanuel.
Hello, Larry.
Yeah, great to have you, Emmanuel. So is the third quarter winding down? This is the last trading day for September and the third quarter. We've seen Bitcoin actually do well, outperform Ethereum for this third quarter. How do you see the performance so far? And, this is a time where we're having the first rate cut in the U.S.
Yeah, you just said it that we just had the first rate cut in the U.S., which is actually a policy signal for all financial instruments, including for all financial, anything that has to do with money that is pegged against, that is pegged with the dollar, because anytime there is a rate cut, historically, the market actually does well. It actually does better because it actually encourages people to actually take loans from banks and actually buy some things they want, some stocks or anything. So the rate cut is going to actually benefit the crypto markets in general.
Yeah, and definitely we know it's looking like risk assets are back in play at this time, even though risky assets actually did well when we had the rate hikes with most central bankers globally. But, also in this third quarter, we've had a couple of airdrops, list on exchanges, some exciting and some, investors say were quite, disappointing according to some players. The latest one was the hamster combat. So, looking at this whole airdrop thing, how do you see it in the third quarter? And do you see more better games, coming for the fourth quarter?
Yeah, I know. When I actually started crypto, I started through airdrops, and we were just few people. Like, we are not that much people actually participating in this airdrop. So the reward was actually significant. But yeah, people actually say that Amsterdam didn't do well, that they got $10. But look at the numbers of people that they actually shared the airdrop to. There are over 30 million people. Like over 100 and something million people actually participated in that Amsterdam combat mining. And like they feed that many people and they actually share to like 30 million people. So if you say $10, because I know of somebody that actually got $20, she didn't refer anybody. She wasn't an influencer or anything. She was just tapping. So she got $20. If this person got $10, just multiply it by the 30 million people, you see that it didn't get that significant because it wasn't that significant much as people are thinking, because there are so many people who are actually qualified for the airdrop. Unless, let me just say that there is a particular limit. People are actually thinking about the market cap and the valuation of the
But Emmanuel, you know, it's one thing to get a certain amount of tokens, but is it on the hamster combat creators, is it on them to determine the price on listing?
Yeah, it's just like a normal project that is going for an IPO. So what they do is they actually set a particular lower limit, like let's just say they set a particular price for people to invest, because there will be some investors, people that will provide the liquidity that people are going to sell in, people that will provide everything that will ensure that this project actually do well in the market on listing. So I think they listed Hamster at maybe around, it was around 100 million market evaluation. So it went to like 1.2, 1.3 billion market evaluation. So I think the liquidity they provided was around 100 million market evaluation. I believe that was what they actually sold to some investors who invested in them and all that. So, but on getting to the listing, he did like 13x or so on exchanges, like the initial buy-up. Then when people started getting the airdrop, the things started coming down. So currently it's trading around 560 million market cap.
So do you still advise, you know, some people that still want to play or chase some of these airdrops, you know, going forward, should they still chase airdrops?
Yeah, airdrop made me who I am. I didn't bring any money into crypto. So in 2021, there was a project called Samodai coin. That coin gave people over 1 million Samodai coin, and it went on to do 0.35 all-time high. And if you multiply it, that is over $350,000. I'm not even talking about the ones I actually qualified for that actually did a lot of money for me: 20,000, 10,000, 15,000, 30,000. So like I said, when you see airdrop, there are so many people are actually involving. Just as if now this hamster compound, maybe there are like 5 million or 10 million people that was actually, maybe like 1 million people, or maybe 100,000 people that actually did it, and the market evaluation got to this price. You will see that they will benefit huge amounts of airdrop. So that is just it. It's just the number of players, the number of people in a particular project doing the airdrop. You can't expect the team to actually give everybody 1,000 or $100. Yeah.
Yeah, definitely. So much to unpack there. But we'll see how it all plays out, you know, going forward. Thank you so much, Emmanuel Anyasi. Yeah. Thank you.
Yeah, thank you.
Yeah, so there you have it. He's saying, you know, if there were not many players, maybe, you know, investors would have been happy on most of those players. But
yeah, I think what Emmanuel said that made me laugh is, well, you didn't come into airdrop with any money.
With anything.
So what are you losing?
Are we asking for too much?
Yeah. All right, Laddie, thank you so much. Well, that's it on the program today. Thank you so much for being a part of it. It's counting down to the Independence Day, and you do know that we have a special program for you from 6 p.m. You don't want to miss it. You have to be part of it. I'm John Mekwa. See you tomorrow, God's grace.